Welcome to My View On, a series of podcasts where experts in the industry give their personal view on some of the big topics making waves in the media. All of the views are the experts' own, providing a fresh look at key issues facing the financial industry. Now, what's a pension for? Time was, the answer was simple, a stable, fixed income in retirement. But much has changed in the pensions landscape, with recent reforms shifting people's attitude to retirement income. To discuss this, I'm joined by Paul Speight, Head of Strategic Accounts at James Hay. So, Paul, big changes in the pensions environment.
Very big changes in the pensions environment. Of course, not least of which has been the way that people have their pensions with their employer. So traditionally, we had what was called a defined benefit pensions market. Most people wouldn't really understand what a defined benefit pension scheme is, but what they did know is that they went to work for their employer, and when they retired, their employer carried on paying them an income for the rest of their life, and when they died, their spouse received the income, and if they had young children, they received that income for the rest of their lives.
So that's the old final salary scheme?
That's your old final salary scheme. And by and large, that's gone. Now, the annuity market, in some respects, was basically replicating that particular experience. So you would get your money purchase scheme, so your pot of money that you'd been saving into and your employer had been paying into, and then at your retirement, you went and exchanged that for, guess what, a fixed income for the rest of your life, and it probably paid for your spouse as well. Now, if you explain to somebody that an annuity is something that is going to pay them an income for the rest of their life, they go, yes, please, I'd like that very much. When you tell them it's an annuity, no, thank you very much, I don't want one of those. So we've got a bit of a problem.
Okay, Paul, but have we been too quick then to dismiss annuities?
Not necessarily. However, that doesn't mean that people won't want an income in retirement. So if we look at what does pension savings look like at the moment, it looks like accumulating a capital pot. All the talk is about a capital pot. So Greg McClymont, whose recent book looks at different pension legislation and objectives around the world, is noting the fact that actually we get this accumulation of wealth into a capital value, but people still need an income in retirement. So how do we get that income in retirement is the big question. Do you look to draw down, whereby you just draw money off the pension fund? Do you go and buy an annuity or something that sounds and looks like an annuity, but we don't call it an annuity anymore? Or do we actually take capital out? And actually do capital withdrawal as a way of funding income?
There's another question here, and that is, do people need to think more about what it is ultimately they're saving for?
Well, that's the good point. And we talk about having different pots of money to achieve different outcomes, and even in long-term savings, it makes sense for you to have your money in various different tax regimes in order to you may want a lump sum at retirement. You take that from your pensions, you take that from your ISA or lifetime ISA, as we now have. All these considerations you need to take into account, and a lot of the guidance that people obviously receive at retirement, that's a great outcome, is quite different to getting full advice, and the guidance may well be just about what you have in your pension fund, as opposed to looking at actually what you're trying to achieve and from which of your different pots you're going to achieve it from.
Let's go back to the beginning, Paul, back to the final salary scheme that you described. One of the beauties of that, of course, was that as an employee, you didn't really need to think about it. You simply got your pension when you retired. And that's all changed now, of course, and people need to be thinking about what type of pension, how they're going to provide for themselves in the future. Again, it's a complicated issue for individuals to grapple with. How should they be going about considering it?
Well, I think this is where the advice market comes into its own. And advisors will take clients through the experience of what they need to know when they're going to invest, when they're going to take money out of different wrappers. The challenge for an advisor then is making sure that he works or puts the client's money into platforms or investment solutions that are matching the same needs. And for my mind, if you're going to have a client who's investing for the long term for their retirement, it probably makes sense to be using a partner, a company that are going to support that, who have a real grounding in that retirement marketplace as well.
Okay, Paul, thank you very much indeed.